Riding the waves. Navigating the implications of rising interest rates on real estate investments. Introduction. In the realm of real estate investments, the undulating tides of interest rates hold the power to reshape landscapes and redefine strategies. The implications of rising interest rates on real estate investments are a topic of perennial significance, influencing property values, financing costs, and investor decision-making. To comprehend the multifaceted impact of this financial phenomenon, one must explore the intricate connections that bind interest rates and the real estate market. The interest rate real estate nexus. Interest rates serve as a linchpin in the world of real estate investments, influencing both residential and commercial markets. When interest rates rise, the cost of borrowing escalates, creating a ripple effect across various facets of the real estate sector. The intricate dance between interest rates and real estate investments manifests in several key implications, each shaping the dynamics of this asset class. Financing costs and affordability. One of the most immediate and tangible impacts of rising interest rates on real estate investments is the increase in financing costs. As borrowing becomes more expensive, potential homebuyers face higher mortgage rates, impacting their purchasing power. This shift in affordability can lead to a slowdown in the residential real estate market, affecting property values and transaction volumes. Consider a scenario where a prospective homebuyer initially qualified for a mortgage at a 3% interest rate. If interest rates rise to 5%, the monthly mortgage payments increase, potentially pricing the buyer out of the market or forcing a reconsideration of budget and housing preferences. This, in turn, creates a domino effect, influencing the demand for homes and subsequently impacting property values. Commercial real estate dynamics. Rising interest rates also cast a shadow on the commercial real estate landscape. Businesses, often reliant on financing for expansion or leasing commercial spaces, face increased borrowing costs. This can lead to a reassessment of expansion plans, potentially delaying new construction projects or prompting businesses to reconsider their real estate needs. For example, a retail chain planning to open new stores may find that rising interest rates elevate the cost of financing the construction and operation of these outlets. In response, the company might scale back its expansion plans, leading to a slowdown in demand for commercial real estate. This interconnected relationship between interest rates and commercial real estate underscores the far-reaching implications on economic growth and development. Investor strategies and valuations. Real estate investors, attuned to the nuances of market dynamics, must adjust their strategies in response to rising interest rates. The value of income-producing properties, such as rental apartments or commercial spaces, is intricately linked to interest rates. As rates rise, the present value of future income streams diminishes, potentially leading to a correction in property valuations. Investors seeking stable income from real estate investments may find themselves recalibrating their portfolios in response to rising interest rates. For instance, they might shift their focus towards properties with existing long-term leases, or explore alternative strategies such as real estate investment trusts, REITs, that provide exposure to real estate without the direct ownership of properties. The impact on homebuilders and construction. The real estate ecosystem extends its tendrils to homebuilders and construction companies, whose fortunes are intimately tied to interest rate movements. Higher interest rates can dampen the demand for new homes, leading to a slowdown in construction activity. This phenomenon is particularly evident in the residential real estate sector, where potential homebuyers may postpone purchasing decisions in response to elevated mortgage rates. Consider a homebuilder that, during a period of low interest rates, experienced robust demand for new housing developments. As interest rates rise, the cost of financing for potential homebuyers increases, resulting in a contraction of demand for new homes. This, in turn, affects the revenue and profitability of homebuilders, prompting them to adapt their strategies to navigate the shifting market conditions. Refinancing challenges in mortgage markets. Rising interest rates also cast a shadow over the mortgage market, influencing the landscape for refinancing. As rates increase, the incentive for homeowners to refinance their existing mortgages diminishes. This poses a challenge for those who may have relied on refinancing as a means to lower their monthly payments or extract equity from their homes. For instance, a homeowner who secured a mortgage at a lower interest rate may find the prospect of refinancing less appealing when rates rise. This dynamic has implications not only for individual homeowners but also for the broader mortgage market, impacting the revenue streams of lenders and mortgage-backed securities. Global and macroeconomic factors. The implications of rising interest rates on real estate investments extend beyond national borders, as global economic factors come into play. Changes in interest rates can influence capital flows, impacting foreign investment in real estate markets. A country experiencing higher interest rates than its global counterparts may attract foreign capital seeking higher yields, potentially strengthening its currency and influencing property values. Conversely, in a global environment where multiple regions are experiencing rising interest rates simultaneously, real estate markets across the board may face challenges. Investors must consider the interconnectedness of global economic forces when evaluating the implications of rising interest rates on their real estate portfolios. Conclusion. In the intricate tapestry of real estate investments, the rise and fall of interest rates act as the currents that shape the landscape. Investors, developers, and homeowners alike must navigate these dynamic waters with a keen understanding of the implications that interest rate movements bring. From the affordability challenges faced by homebuyers to the strategic recalibrations of real estate investors. The ripple effects of rising interest rates extend across the entire spectrum of the real estate market. In this ever-evolving environment, those who grasp the intricacies of this relationship will be better equipped to ride the waves and navigate the changing contours of real estate investments with resilience and foresight.